Good afternoon, everyone. Thank you for coming. If we could just everyone have a seat, and we'll kick off. I think this is the last panel of the day, so I'm sure everyone's a little bit tired. You've talked a lot, met a lot, and we're just going to try and keep this one short, sweet, to the point, and interesting. So my name is Betty Gebreas. I'm going to ask my fellow panelists to come up to the stage. Yousef, Damilola, and Ogo. We're here to talk about, Nigeria and the broader investing environment in the country. I'm sure many of you are very well versed, but we're going to try and enlighten some more and invite you into the conversation as well. So let me start maybe by talking about myself. I am the head of heavy industries, telecoms, and technology for Africa Finance Corporation. For those of you that don't know, it's a development finance institution. The answer to the question asked at the AU, what if we had a DFI that was funded by African capital, staffed by African citizens, trying to solve African problems with a unique perspective. We went from 18 years ago, 7 member countries, kick-started by the Central Bank of Nigeria, to currently we have 46 member countries, from $1 billion in initial capital, then to over $15 billion in capital today. We invest across power, transport, heavy industry, telecoms, technology, oil and gas, mining, and sovereign lending. We do debt, equity, and project development in infrastructure across the continent. So that's us at AFC. I'd like to quickly ask each of our panelists to introduce themselves, and then we'll kick off the conversation.
Sure. Thank you, Benya. Good afternoon, everyone. My name is Yousef. I am the chief executive of a company called Ripple. Ripple is an equity investment platform conceptualized, operationalized, and launched by the Nigerian Sovereign Wealth Fund to tackle specific problems in the energy landscape. NSIA directly develops domestic infrastructure, and energy is a very key vertical in that space. So we looked at what the issues were in the energy landscape, and equity. There's a paucity of equity, and as such, we set up as an equity investment platform, looking at we have a multi-vertical approach, not just energy generation, which is the mainstay, but also manufacturing on the one hand and energy distribution on the other. So thank you. It's a pleasure to be here.
Yeah, good afternoon, everyone. Excuse me. My name is Okiti, and I'm a special advisor to the Honorable Minister of Finance and the Coordinating Minister of the Economy for Nigeria, Mr. Wale Edun. The office of the Honorable Minister, as you would imagine, in the last 2 years, has been the center and the heart of the economic reforms that we have seen. I mean, some profound policy changes, whether it's in the area of fiscal changes and, of course, removal of fuel subsidy, and even the one championed by the Central Bank of Nigeria, and other reforms around, oil and gas and other industries that are not quite as significant as those 3. In every of these policy, whether initiated or originated, our office is, the office of the minister is at the heart of it. And as a special advisor on communications, we try and communicate this policy. And one of those key policies is actually how we attract scale and, of course, expect investment to thrive in Nigeria. And are we there yet? Not yet, but I think we are in the right direction. Thank you.
All right. Good afternoon, everyone. My name is Damilola Aloba. I'm a partner with EY Parthenon. That's the strategy and transactions side of EY. I sit in a position where I advise clients both from private sector and public sector point of view. A lot of our clients are those that look into investing in Nigeria, so we guide them in the process, from an advisory to diligence to market assessment, and also really looking at all the numerous tax regulatory implications of what their investment, the investment they're trying to make. And of course, you know, we have other arms of our business, which is the assurance, what you call audit, and consulting. So it's good to be here to share thoughts on what we are really seeing in the market, what is driving, what are the trends within some of the sectors in Nigeria that makes them quite attractive.
Okay, thank you. So, I mean, I think it's always best to start out with some context setting. And you know, for that, I mean, I'd like to turn to you, Okiti, in the first instance to talk maybe about, you know, what are the trends you're seeing in just the overall economic environment? What are the growth trends? How have they changed? How have the policies, the recent policies that you mentioned around fuel subsidy, also around, you know, currency, capital controls, willing buyer, willing seller, how are those flowing into the real economy? What are you guys seeing?
Thank you so very much for that question. Before I answer that correctly, let me just provide some kind of context, especially just in case people are not aware. One of the narratives, I mean, especially before last year, was that some of these policies were knee-jerk, some of these policies were rushed, some of these policies were not thought through. But that was naturally never the case. But you know, obviously, because of the volatility that people saw after those policies, so it was bound to happen. But when this government came into power 2 years ago, it was very, very clear at that point. One, the growth was weak. I mean, we're doing an average of 2%, 5 to 8 years before then. There was no investment really coming in. If you look at the FDI data, there was no significant investment coming in. And of course, third, in terms of fiscal strength, it was near collapse. So if you look at those three economic conditions, then you ask yourself as a government, what do we need to do? So the first thing that they needed to do was to try as much as possible and remove the distortions that has affected investment inflow into the country. And that's why they did that removal of fuel subsidy and of course the liberalization of the exchange rate. So as you, any economist, I mean, anyone that has done economics 101 will tell you those are two fundamental major profound shocks in the economy, and those volatility was going to happen. So the second stage was to actually stabilize the economy. And of course, the third stage, which we are entering now, is now how do we build inclusive growth? So if you look at the Q2 2025 economic growth that we saw, which was 4.23%, many people say, why should you celebrate 4.23%? But that's the largest quarter economic growth in a decade. I mean, for a population of near 3% growth, we're growing 2%, so you can only imagine how many people has actually migrated from one level to poverty in the last decade. So apart from the COVID 2021 rebound of 4% that we saw, I think 2 quarters in 2021, this Q2 2025 figure was the largest growth we have seen in the economy. So this is the evidence that one, these reforms have started to work. However, what is the single metric of evaluation in this government? The single metric is we want to lift millions out of poverty. We want to lift millions out of poverty, especially because in 2015, the ratio of Nigerians under the poverty line is not as large as it is now. So while the statistics, especially the macro numbers, are improving, what is critical is how do we lift millions out of poverty? So there are 2 strategies to that, simple. The first is obviously private sector investment. Private sector investment must thrive, it must scale, and of course, that is what we are doing. So whether it's domestic, whether it's international, we want to attract private sector investment. And what do they need the most? Macroeconomic stability. So everything that we are doing as a policy and as a government is to ensure that we maintain and keep, and in fact strengthen the macroeconomic stability that we have seen in the last year. So that's number one. The second one, which is also related to it, the role of government that we see today, and I'm not talking about 5 or 7 years ago, today the role of government is so limited to look, how do government catalyze private sector investment? So we know that, okay, in that case, you have to focus on infrastructure. In that case, you have to focus on macroeconomic stability. In that case, you have to focus on regulation. In that case, you have to simplify taxes. So every other thing that we are doing is coming towards maintaining that first strategy, meaning that attracting private sector investment. So in terms of how are we doing today, we are making progress. But as you can imagine, we're coming from a very, very low base. So where we are now is progress, but not enough progress to begin to dent the numbers in that poverty line. And even in terms of investment, we've seen some progress on oil and gas, because even before this last 2 years, oil and gas investment kind of stalled. And that used to be like the automatic in quote, you know. But why did it stall? Because the fiscal incentives was also not right. So this government has actually made progress also on fiscal incentives in that area. So we are seeing investment conversation, and I think I've been having some conversations in this building since yesterday. No doubt about it, there's a great number of investment conversations. I believe, if you just look at the conversations, some of them have not actually been concretized, but that conversation is growing. So we are in the right direction in terms of private investment. We're in the right direction in terms of fiscal, appropriate and right fiscal policies, and what we just have to do is sustain that. Thank you.
No, thank you. I mean, it's really insightful, to hear what you just said, especially in context. I mean, I think what really stuck with me was your point around the current government's North Star. The metric that matters is lifting people out of poverty. For me, as a keen observer of economic press, some of the numbers that had jumped out to me more was the movement in the current account, from deficit to surplus, and the black market exchange rate to the official rate. And I mean, I'm sure you guys are pleased with both of those. I guess, could you talk a bit more about some of those bright spots? Like, where are the indicators that you follow, just to see the leading indicators for what is the poverty situation, gonna be like the movement out?
So, you have the macroeconomic stability indicators. You're looking obviously at exchange rates, largely stable now for about a year. But you also have to look at inflation numbers. It's declining, at least for the fifth month now, but it's not as good as we would like it. Okay. Whichever way you look at it, 20% is still very, very high. So the only good thing is that it's declining. So this year, we were looking at 15%. I don't know if we will get to that point, but at the start of the year, that's what we're looking at. So that's for macroeconomic stability metrics. But in terms of poverty, we're looking at growth numbers. So our medium-term growth is 7%. Medium-term means the 3 to 5 years. So that was the target that was set last year. So we're hoping by 2027, 2028, we should have 7%. But that's obviously a tough ask, coming from a 2.5% range. We now have 4%. So at the end of this year, hopefully, we have Q3 numbers and we have Q4 numbers, and we are able to maintain an annual growth numbers of 4%. Then we now need to move to that 7%. Why is 7% a target for us? Because we believe in order for you to actually make a dent in poverty, you need at least twice growth rate compared to your population growth rate, which is currently almost 3%. So 4% won't do much. We need about that 7%. And not just 7%, there are two other metrics that needs to happen. One, it needs to be sustained, and of course, the second one, it needs to be inclusive. Because we've actually had growth before where it was not inclusive, and that is why we need investment across sectors. Especially the job-creating sectors of the economy for it to be really, really inclusive. So these are the things that we're looking at.
So, Dami, turning to you, can you talk about, again, like you said, one of the things you're doing is helping investors, whether they're foreign investors or domestic investors, in what looks like a turning economy, from a circumstance where we had years of decline, extreme volatility, especially driven by COVID. With this new administration, with some of these green shoots around, what do you call it, exchange rate stability, finally, inflation, which is declining as opposed to increasing. What are investors telling you? What sectors are they excited about? Where are you guiding them to that maybe they weren't even looking at in the first instance?
Thanks. I think today we're seeing a lot more interest from domestic investors, in addition to the fact that foreign investors too are very keen now, bearing in mind a lot of the policies that he had already talked about. And one of those is the fact that a lot of investors were concerned about, if they invest today, how do they, repatriate their investment or capital? But I think today that issue has been resolved to the extent that there's a lot of predictability around, FX. Not you invest at 1,000 to $1 and you don't know what is going to happen. But a lot of that from the reform standpoint. But where are investors looking at today? A lot of agro and agro-processing projects are going on. A lot of interest from that space because, of course, for a country where we are highly populated to the extent that we are today, there are a lot of, cocoa, cashew, more food, rice, all kinds of, commodity type agro-processing, projects and investments, going on. And also, interestingly, there's interest within, the healthcare space. A lot of DFIs and also private investors looking at opportunities within the healthcare space. You know that recently there was the commissioning of the AFSIC, Africa Medical Center of Excellence, which is essentially to domesticate, healthcare delivery as against, trying to address health tourism, medical tourism. And indeed, there's also the angle when you think about the insecurity around pharmaceuticals, right? Where during COVID, there was a total shutdown of the supply chain where pharmaceutical companies could not procure what you call formulations. And indeed, you know that not maybe just about 30% of pharmaceutical drugs you see in Nigeria are produced locally. So to that extent, when the lockdown happened for like a year, there was what you would call like insecurity to that extent, So now you are seeing a lot of, pharmaceutical companies trying to now start developing what you call active pharmaceutical ingredients. And I think NSI is also one of the champions of, trying to ensure that we actually, invest and procure those formulations locally as against going to India and China. The more we do all those, it's going to address a lot of our, local needs. And of course, other sectors are there, data center investments within the technology, space, logistics, even financial services, So look, it's looking better. Infrastructure is also a clear area where the investments are going to. Renewables, knowing where we are within the power sector, and of course, a lot of focus is on special agri-processing zones, where we all know that the way to grow this economy is through industrialization with a clear industrial plan, for the country. So now, one last thing I want to mention is the fact that a lot of multinationals are exiting Nigeria. They're selling their stakes, not because the economy is, not because, maybe because they need to also diversify, but the domestic investors are taking up a lot of these opportunities, and newer investors are also emerging. Like the Indians are, there's a lot of focus from the Indian, Asian markets into Nigeria, and we get a lot of, discussions on new projects, new investment, and indeed, it started like about a year ago when there was a lot of, certainty around the FX. So you will see, I dare say to you that in the next 6 to 9 months, or even a year, you see a lot of Chinese investment, you see a lot more of Indian investments. And some big names that in India with the deep pockets are also, about to begin to show their faces in a lot of sectors within Nigeria. So for us, it's looking really exciting compared to, what you had about 2-3 years ago.
Yeah, I can attest to the same observation, from our seat at AFC, where we are seeing a lot of Indian and Chinese entrepreneurs, investors looking at various sectors throughout the economy. One of the things, though, I'd be interested to hear your point of view on is, when these multinationals, Western multinationals, are leaving, and the new investors are coming in, what are they facing in the capital markets in terms of raising financing? Is it local currency? Is it hard currency? What's the rate environment that they're coming into? Because I know one very typical thing that we saw is people had a preference historically for USD denominated debt, but because it was cheaper. But then you have the currency risk and the capital the capital flow risk, the ability to repatriate. But now you're starting to see more liberal capital or currency markets. You're able to repatriate. Does that make people more comfortable with that currency mismatch, or are people so burnt from having the currency mismatch that actually, they'd rather just stick with naira for naira revenue and borrowings? How are investors thinking about that particular dilemma?
Well, in my view, the interest rate regime is, interest rates are high, 27%. So if you want to borrow today, you'll be thinking about 30% and above, depending on your rating as a company. So a lot of them are looking at commercial papers as a way out, And of course, it's understandable looking at where inflation is, and a lot of efforts being, undertaken by the government to kind of bring down inflation to the various minimum. And you can see improvement in that. And lately, MPR was reduced slightly. I don't see how that will impact companies immediately. It's still, I think there still needs to be it's going to take some time in the short to medium term where you can actually have interest rates that would not negatively impact businesses. So the way out is still really other avenues like your CPs. And that's really where I think, the situation in Nigeria is not the issues are not going to be solved overnight, but you can see clearly that there's significant improvement. So we should just encourage more FDIs into the country. The more you have different, sources of capital flow into the country, it's going to also contribute to, easing of the interest rates to levels where, businesses will be able to operate without any strains on their cash flows as it is today.
So, Yousef, if I can turn to you, from your seat at NSIA, I'm sure you have a global view of what sectors within the economy are going to be the biggest catalyst for growth. I think your particular focus is actually on energy, renewable energy.
Yes.
But I'd just be interested to hear, first, before we drill down into the renewable energy space, what does NSIA see as the prime engines or catalysts for the type of inclusive growth that the nation needs to experience?
Yeah. No, thank you, Ben, and again, a pleasure to be here. So NSIA, unlike other sovereign wealth funds, is quite unique in the sense that it has a very strong domestic infrastructure focus. It is only allowed by law to invest directly into infrastructure in Nigeria. And about half of its AUM is actually focused precisely to do that. And something that we try to also avoid is crowding out private sector capital. And as such, we usually tackle areas that are difficult to reach or areas that the country has repeatedly failed at getting done. And a couple of examples to note would be the Second Niger Bridge. That has been in the works for more than 4 or 5 decades, but it was done. The Lagos-Ibadan Expressway, a huge arterial road, that was done as well. You look at the oncology center that was built within the Lagos University Teaching Hospital. I think for me, it was a $10 million investment, but perhaps the most impactful investment that NSIA has done in Nigeria. And why that is instructive is it opened in 2019, COVID happened in 2020 with the travel restrictions. You can just shudder to think about individuals that would have otherwise gone to Ghana or Egypt for cancer treatment, now being able to access that in country. And off the back of that, NSIA is rolling out about 13 tertiary healthcare centers across Nigeria, about 3 additional oncology centers, diagnostic centers, and I think renal and so on. So it's really those difficult areas that it tries to tackle. Healthcare is one. Agri is another. We're very keen on the special economic zones that Dami mentioned earlier. There are a couple of other investments as well that we're doing in that space. The extractive industries, I think, is one that we are betting on as well. That it's important that we leverage on the resources beyond oil and see how we could sort of beneficiate, retain value. And again, I'm very pro retaining value retention, localization. It's very key. That is really how we can have sustained growth that my colleagues have mentioned in Nigeria. Anything else, be it getting FDI because rates are high or anything else, isn't firm on substance. The way out of this route in a very sustainable fashion across several administrations is actually to build that industrial base. And that's what NSIA is really driving at. Technology, I agree with Dami as well. NSIA is invested in the first hyperscale data center in Lagos. And we want to see a lot more of those things being built in that part of the world because it is scarce. And with the drive in AI and how organizations are, again, being very data hungry, it's important that with our renewable energy resources, with our very huge gas resources, that we're able to set up these things in a very strategic fashion to tap into this global AI drive, as it were. So a lot going on, a lot of positives. I think we're quick to say that there's stability in the FX regime and all of that, and I do hope that it subsists. But stability here is very relative because we've been at this for maybe a year and a half. If you were to go to, say, any of the Gulf countries, the exchange rate has been 3.6, 3.7 for the last 2 decades, for instance. It's that kind of stability that we want to see. I'm hoping that the trends build. I particularly like the question you asked, Dami, on exchange rates. On interest rates. It's quite interesting that for quite some time we've demonized hard currency financing, but right now it's perhaps the only route to financing large-scale infrastructure projects. For instance, there is no investor that will take 30+% money and expect to turn a margin when you're not doing, anyways. It's almost impossible, yes? Even the concessional, they say blended finance rates are high as they are at 20-22%. It's still quite punitive, whereas if you're able to take SOFR plus 4-5%, layered devaluation of about 10%, you're still more competitive than the concessional Naira financing. That shows there's a problem. I don't buy the argument that high interest rates in this case is to curb inflation. I think it's not working. We're in a part of the world where our economy isn't like America or any of the Western economies where it's heavily credit. We're a very cash-rich economy. You raise rates to curb access to capital, yes? But here in Nigeria, the demand subsists and people have money to chase that demand. So it's not a case where credit informs what that demand is. So it's a bit of a dicey situation. And I'm hoping that that correlation that I think is non-existent, but again, I'm not an economist, I'm an engineer, but I'm hoping that we realize that that doesn't work. I mean, it's done wonders for FDI because our Euro bonds, they sell at a very high competitive rate. So does Naira bonds. So it works in one instance, but that balance is quite important. But I think in general, there has been a lot done over the last 18 to 24 months, quite a lot. You talk about subsidy removal, exchange rate unification. On the electricity side, the Electricity Act of 2023, and now having states essentially they essentially now have to devise means of decentralizing energy. So it's quite a huge shock to Nigerians, to Nigeria, and I think we've handled it quite spectacularly. If anything, Nigerian entrepreneurs, Nigerian people are quite resilient. And that resilience has shown over the last sort of decades. What we want, speaking as an entrepreneur right now, not as someone from the NSIA, would be that if there would be a focus, it should be on the ease of doing business. When I was handling the gas portfolio with the NSIA, we did a mapping of stakeholders to engage for a gas project, and there were like 21 stakeholders that we needed to engage. That's just crazy, yeah? And this is for a Nigerian entity. Think of someone flying in from Europe, wanting to set up an industry and having to engage 21, oftentimes overlapping institutions. So it's mind-boggling. You have customs when you're trying to import things. It's an issue. When you're trying to export things, it's also an issue. So Ministry of Finance, they report to you. I think if I had one wish as someone participating in that system, it would be ease of doing business, but as it relates specifically to customs, for instance. Renewable energy products are duty exempt, for instance, but the process of getting that exemption, it's interesting to say the least. And this is me coming from an institution or an organization backed by the NSIA. You can then think of the common man trying to set up a small business, for instance. So there has to be a keen focus on ease of doing business. It should be easier, and yeah.
No, I think you said a lot of really interesting things. I mean, I really particularly glommed onto your point around, is the transmission mechanism for reducing inflation via interest rates, does it really work? Because it hasn't been working.
Yeah.
And so then, what is the alternative? I mean, I don't know if that's something that you guys have thought about. Do you accept that maybe the economic realities in Nigeria are different than, say, what would be true in the U.S. and maybe interest rates are not? I mean, this is actually the first time I've thought about that idea, so it's interesting to me. I don't know, is that something that's come up before?
Well, I think first, I will not be speaking for the Central Bank of Nigeria because, I mean, that is their purview and they have their own reasons for raising interest rate. But let me speak as an economist. So I'm not speaking for them, but let me speak as an economist. The reason why I think they needed to do it is because we needed the foreign exchange badly. And the only way you can quickly crowd in those investments is by raising the interest rate enough to make it attractive for them to come in. So if you look at the direction and the scale of FPI that has come in, they've come in on the back of those increases in in interest rates. Because, as you said, I mean, if you're talking interest rates in euro, no matter how high it is, we're still talking about 4 or 5%. In the US, same thing everywhere else. But in Nigeria, somebody's giving you 27%. And of course, by the time you discount even the exchange rate risk, you still have something significant to hold on to. So I think that is why. However, going forward, I'm not sure how they want to start to ease those rates. But as you said, following 5-month decline in inflation, they removed the 0.5% the last time. So that's where we are. But let me now add, I think the most critical, in my opinion, and I'm speaking as an economist, the most critical thing I think they may be looking forward to is inflation in January and February. And I will say why. The reason is because the inflation numbers we are seeing now was because we actually changed the index, the inflation index. We expanded the basket of goods we were looking at from 500 and something to 900 plus in the last year. That's 2024. So this is the first inflation data that you are seeing since that happened. So I think in January we will see the first year on year of this new basket. As an economist, like I said, I think they will be looking at that as a milestone rather than comparing where we are now to where we are last year, because you couldn't do that because you've changed the basket. So that would be my response.
Interesting. But going back, I wanted to talk more about power specifically, because that's actually such a central part of any economy. And I mean, the power sector in Nigeria has been notoriously disappointing, for lack of a better word. I mean, even where there is generation, the transmission's not quite sufficient. Even where you have generation and transmission, then maybe collections aren't what they ought to be, or tariffs aren't cost reflective. Now, I believe there's been a lot of reforms in the last couple of years. So can you talk about what has the government been doing, what has NERC been doing, what has the private sector been doing to improve the situation over the last couple of years? What do you see over the next few years?
Right. So I think for starters, we need a bit more data in the energy sector. I mean, since I started in this industry, it's always been we have 13,000 megawatts. We can do 5,000-6,000 megawatts of transmission. Only 3 gets to the end customer. But that's not the whole story. Nigeria has about 75,000 megawatts of captive demand. Nigeria still attracts international capital in terms of investments within the sector. Nigeria, we have one of the best mini-grid regulations on the continent. Other countries learn from us. We have a very progressive regulator that's looking at industry to inform regulations. I have, perhaps, you compare it to our mainstay in the oil and gas sector, I have never really seen any regulator engage, consult the public in coming up with regulations as an ERC has done. So I think there are lots of positives. And it's really then about taking all of these things back and essentially backing it up with local institutional capital to drive these things. And I think that's really how we're able to get out of this rot that we have. One singular narrative doesn't work, so we have to have a sort of multi-approach in terms of how we think about our energy journey. It is investing in the central grid, it is investing in decentralized systems and everything in between. Like I said, we have lots of captive generation that are, again, in bits and pockets out there. What NERC is now doing is coming up with a net metering regulations that then allows you, with your capacity, and anyone that has sort of surplus capacity to feed into the grid. I mean, a lot of work would go into that, because if you consider, and again, when I learned about this, it was so concerning that a country such as Nigeria, almost 1 million square kilometers, tens and thousands of kilometers of lines, we don't have a SCADA system that's able to monitor and control, to visualize the grid. It is, I mean, in the 20s, other economies had a system that could monitor, yeah, but we're still where we are. But again, it's not seeing the situation as is, it's seeing what we're doing to sort of remedy these things. The World Bank has, over the last sort of 2-3 years, been very intent in deploying a SCADA system in Nigeria. By the end of this year, we should have about 20% coverage, and then so on. I mean, even for us, when we look at investments in that space over the last sort of, since the Electricity Act was enacted, we had cause for pause. We had to take a step back because we didn't know where states were going. This is an Electricity Act that has unleashed powers on states. A lot of the time, just considering the where we are in terms of our democracy, yes, a lot of states went through a change in governorship, in leadership, in that regard. So there was a lot foisted on these states in general, but then you layer that with the newfound powers in the electricity sector. So that was quite a lot to deal with. What I fear, being an investor here, is a case where we have 38 regulators going in different directions. Yeah, it is quite scary, to be honest. So what we try to do with partners such as GIZ, that has been in Nigeria for quite some time, that we applaud for sort of their consistency and how they've been able to support the Nigerian energy sector. Same with UK and IF. Is to just see how we can make states come up with some sort of coherence in how they think about these newfound powers that they have, to ensure that at least there is, if you're dealing in one state, that it's something similar that would apply in the other. Would I have preferred a more regional approach rather than 36 states plus the FCT plus a federal? Perhaps, but we are where we are, and we have to deal with this construct as we see fit, or at least as the market evolves. So I think it's very, very interesting times, but we can't stop investing. We can't stop trying to make progress, at least leading the way as the market evolves. But I think we'll have very interesting times going forward. What we're also trying to, what Nigeria as a nation is also trying to achieve, I think our M300 National Compact is very ambitious, is very coherent. I think kudos to those that drafted it. It makes a lot of sense from the perspective of what Nigeria wants to achieve. And it's like it dumped all its energy aspirations into that plan, and it was a very well thought through piece of document. And we've latched onto that. We support it, and that has informed the DRE, the Distributed Renewable Energy Fund that we announced in March, and we hope to close in Q1 of next year. Again, supporting that energy access story. Nigeria has to succeed if M300 is to succeed, because again, in absolute numbers, we have the largest number of unelectrified individuals anywhere in the world. About 80, 90 million people. So more than China, more than India, that have 1 billion plus people, yeah? So it's a huge task, and if out of 300, Nigeria commands 80, 90 million people, it shows that there's a lot of work to be done, and lots of lessons are taken from Nigeria. So we have no choice but to succeed in getting this M300 promise or a commitment over the line. But so I think in general, in a nutshell, quite interesting. Energy is the perhaps leading indicator of how well a country is doing from an industrial perspective. Steel and others would follow. But I'm very optimistic. I think we're very bullish in this space particularly.
I mean, one thing that's certainly in vogue in the power sector is the shift towards more renewable.
Yes.
But of course, that comes with the challenge of its intermittency, and when you have a grid which is already challenged to
Yes.
distribute the power it's generating, which is more predictable.
Right.
What needs to happen at that central nexus, at that grid level?
Right.
Like you mentioned, the SCADA system. Could that actually be what's missing, or do you have to go like 2 steps farther? Like, how do you make the grid renewable energy ready?
Yeah, that's a very interesting question, and I think how we're looking at it together with TCN and NISO now is in a sort of multifaceted approach, yes. We're a renewable energy investment platform, yes, but I think I do not hold that purist ideology that it's renewable and nothing else. If needed, we will invest in gas generation for baseload to support renewable energy. I think it's a very unpopular opinion, but I think it's in the African context, it is very, very vital that we don't be allowed to be herded into that narrative that it's only renewable energy, we have to decarbonize and all of that. We can decarbonize very responsibly, yes, but it's also important that we consider the resources that we've been blessed with, the peculiarities of our systems, and act accordingly. The grid is in a very, very precarious situation at the moment, even more so than it was a year ago, because a lot of people, and if I were to poll the Nigerians in this room, a lot of people would say they have a solar system and some battery backup at home and all of that. What that effectively does is it lowers the demand from the national grid. And again, if you then have a huge intermittent variable renewable energy on the grid, for a grid that is comfortable around 4,000 to 5,000 megawatts, what happens is if one line of the 330 kV transmission system were to be de-energized, the grid will collapse because that's 10%. And that is part of the constraints that the transmission company has in allowing or licensing or approving large-scale variable renewable energy projects on the grid. I mean, there are various ways around it, and that's what we are trying to sort of champion. We are co-locating large solar plants, co-locating them alongside hydro, because it makes a lot of sense. There's a lot of complementarity between hydro and solar. We're also looking at large-scale battery solutions as well, just to reduce that intermittency. Unfortunately, of all resources that Nigeria has been blessed with, wind isn't one of them. I think in the near future, when technology evolves, we could start to look at wind energy because it's a bit more predictable, at least more so than solar, and so on. But it's really having that open mind co-creating solutions that allows us to harness what we have to work with. But I think I think there has to be some sort of game plan as to how we decentralized. There has to be a game plan on how we decentralize as well as maintain the grid that we have. And I believe absolutely that both must coexist for us to have more stable power, to have cheaper power, and again, more sustainable power in the future.
So, Dami, I'm going to throw this one out to you. One of the, again, it's a perennial problem, I think, across the entire continent is security. And I mean, I think Nigeria suffered from a fair degree of insecurity in recent years. I would argue that it's perhaps improved in the last, say 12 months or so, but I'd be interested to hear what investors you deal with have to say about it. Is it still issue number 1, 2, or 3, or what do they see as the?
I think there's a lot of there's good feedback in that regard when it comes to security. The perception is different from about 2 years ago. Then you would have the Boko Harams, you have kidnappings, and all of that. I'm not saying all that has been totally eradicated, but it has at least given some more confidence in the environment. And I believe that with the government's body language as well, and efforts that have been made, is continuously bringing about a lot more confidence in investors bringing in their capital to invest in Nigeria. So I think it has to be continuous, and there needs to be a lot of orientation as well on the part of government to continue to educate people, the citizens, on how we can improve on our security. So investor-wise, I believe that there's good, the perception is better. And I'll also just say that from the perspective of looking at this from the northern side, looking at the northern part of Nigeria, I think there's need to be maybe a lot more education on what's going on over there, But holistically, there's improvement, because no one will invest in a place where, no one will go to Ukraine to invest. But investors, like I said at the beginning, are looking here, and even to the extent of looking at other new sectors like the creative economy, creatives. That's another aspect that where by virtue of the opening up, the economy opening up, such sectors are receiving a lot of attention from investors. So, yeah. So,
I just want to speak from our perspective, and at least my experience over the last 11 years operating in Nigeria through AFC. Some of the greatest success stories we've seen in what's the word? Trying to create a conducive investment environment and economic growth is in some of the backward integration initiatives. I think the biggest success story, in my mind, is at least the cement industry. How you had something that was, primarily owned and managed by foreign multinationals that today is dominated by, two homegrown industrialists. They're our clients, and we're working with them today now to go into other backward integration projects in sugar, for instance, and in crude refining. And I think maybe one of the most transformational in narratives on the entire continent in the last decade has to be how Dangote has built the world's largest single train refinery. I mean, Africa's largest refinery of any kind. I mean, when we talk to a lot of the kind of like global oil traders, refined product traders, I don't think any of them believed it was actually ever going to happen. If it did happen, I'm sure that they all were convinced it would fail, collapse, somehow self-sabotage. And I mean, invariably, the one thing that we're hearing is that even though it took longer than it was ever announced to take, it happened a lot faster than anyone ever believed it could happen. But, I mean, with that said, I mean, I'm just curious, in your own minds, are there, specific initiatives that you have seen or are seeing kind of take form? I mean, I think you mentioned, or was it you? One of you mentioned healthcare and the activities that are going on. I think actually maybe it was both of you that mentioned some of the activities going on in healthcare. But what are some of your kind of favorite anecdotes around what is Nigeria doing maybe better than expected in terms of catalyzing investment?
Well, I think recently we all saw this. We heard the story of Dangote, how the labor unions or Pengassan had issues with him regarding the refinery, and what I think government did well in that is to intervene and to buttress Yousef's point. Right, there needs to be an enabling environment, right, and government support. You can't attract investment into Nigeria if the known industrialists, the known investors are experiencing challenges, either from inability to do business due to multiple agencies, harassing the business you're doing, or other agencies like the, should I call them unions, like the labor unions and all that. So what I'll say is, I think government needs to continue to support domestic investment and even foreign investment. But the reality there is really that the more you encourage entrepreneurs, local entrepreneurs to do business successfully, it stands as a sort of benchmark or as a case study for others to do the same. And Dangote has done something in the cement industry, in the refinery industry, in refinery. There are other refineries that are springing up. Gua is doing a refinery. Walter Smith is doing a refinery, and a host of others. We need to see more of that. And the more you protect these local entrepreneurs, you will see a lot more entrepreneurs spring up, and also you see foreign investments, coming to the country. So we need to look at it from a sector-by-sector perspective. What interventions do they need in financial services, for example? I think financial services is relatively stable due to the strong regulation in that space, within the sector. But what are the other sectors? Is it healthcare? What is needed? How do you ensure that nurses and doctors come back home, right, to support the industry? You hear doctors and nurses trying to strike all the time, go on strike all the time. But I'm saying here that the more government begins to create that enabling environment for them, they will stay behind and grow each of those sectors. I mean, you look at other sectors that are of utmost importance to us: infrastructure, agriculture, right? The demand for food in Nigeria is immense, right? Beyond the fact that you are feeding 230 million people, Nigeria is invariably a market for over 430 million people because of West Africa. You know that neighboring countries also depend on Nigeria. So everything you're producing in Nigeria, invariably you know that it's moving to Niger, Benin Republic, and all the neighboring countries. So really, how can government support fertilizer? I think NSI has done a lot of great work in there, acquisition of fertilizers. What else can we do? Creating the kind of financing that is required to, for for agriculture. Of course, it's not your 30, 40% interest facilities that we support in the agricultural sector. So that's where BOI comes in, Bank of Industry, where they have all kinds of funds that support agro plus agro processing, cold chain acquisitions, and all kind of things. You also have Development Bank of Nigeria. You have the private equity investors, the VCs, and indeed the tech space. You can see what's happening in the tech space, well regulated. In fact, I'll say that there's a lot of maturity within that industry compared to even most of the developed, countries. So a lot of government policies aimed at protecting the local industry would help, and deliberate support. I'll say deliberate, because if the thing that happened to Dangote recently, if they didn't get government support, I can always tell you that, nobody would look at Nigeria, because how can I come to your country when your richest man, biggest industrialist is suffering from the harassment and, So in conclusion on that matter, I think government should continue to support. But one last point, which something that I think is missing, is projecting Nigeria's image. I don't think we're all doing well enough. In fact, I ask myself at times that, what is the National Orientation Agency doing? I've done a study before on the industry, creative tourism industry, and I know that certain countries have done so well in projecting their countries. If you look at India, there's what you call...
Is it Incredible India?
Sorry?
Incredible India.
Yes, Incredible India and all kinds of slogans. These slogans, this kind of promotions actually show the world who India is. I think rather than us, talking, oh, this is bad and that is bad, we need to continue to project our country. A lot of foreigners, when they come to Nigeria, they actually have a different perspective about Nigeria compared to what we that live in Nigeria actually say. Lagos State hosted the E1 racing competition, I think last weekend or so. That's brilliant. Those are things that we need to see a lot more. And in December, there's going to be Dirty December. Whether we like it or not, if you want investment into the country, you need to continue to project a good image so that investments will come.
So, Yousef, maybe the same question to you, just around where do you think Nigeria has outperformed, where the government or the private sector has done something in excess of maybe what was expected?
Quite frankly, I echo Danny's points 100%. Before the refinery came online, probably a lot of us didn't know what Dangote sounded like. But the issues that individual has faced, he became a podcaster overnight, So he's always on the news stating things, So he's the largest employer of labor outside of government. He has investments in all over the country, virtually, and Africa as well. So we have to, like the Vice President said, jealously guard those kinds of institutions, as it were. So it's very key. And I also do agree that we have to be a bit more patriotic. You look at the work that the CBN or NERSL or with their issues, no doubt, but how they've been able to champion the agricultural revolution through the Anchor Borrowers scheme. You have individuals that have been supported through extension services, they've been given inputs, training, and all of that. But when the harvest comes, rather than then pass on that goodwill to Nigeria, they hoard products, waiting for costs to then go up. So how is that patriotic? How does that make sense, So it's really then about our ability to look after each other and one another and essentially drive it. I think we need to borrow Lagos's PR for Nigeria, because it seems like they're doing much better than Nigeria as a whole in terms of projecting the image of Nigeria. I've seen a couple of national orientation agencies attempt at projecting this, but they're probably not doing it as good as they should. But there's work to be done. And again, we have to believe that Nigeria is worth investing in, is worth fighting for, is worth being for others to then come in. So I'm very pro, if it's on the investment side, that it should be led by local institutions before we then try to persuade others to come in. So there's a bit of work, but I think I'm very optimistic. I think we're very bullish about the prospects that is Nigeria.
Okay, what would you highlight as the...
So let me go back to where I started. But a bit of context and maybe a career context. I studied in this country up to 2003. So,
sorry, just to clarify, this country meaning UK or
yeah,
the
UK.
US?
Yes, I was a student in the university. I did my PhD in Manchester University. So, and I got this job with Business Day Media Limited. So that's why I left the UK and went to Nigeria. I was the first chief economist chair board of that business publication. Now, I wrote over 200 articles. If I go back and check those articles, at least 5 to 10% would have been on fuel subsidy. So that's how much I knew we needed to just do away with that. And not for the reasons that many people think. If we did not remove the fuel subsidy, one, we would not have these investments, even though this investment was conceptualized a few years ago, but we will not have this investment drive anywhere at all. What I mean is, for instance, Dangote will not sell to the domestic economy. It will just sell outside, right? Okay, then we have BOA that is coming up. But those are the things that people are looking at. What people don't usually see is that until you remove the fuel subsidy, you cannot have the foundation for a thriving petrochemical sector. And if you are going to spread energy anywhere in Nigeria, in Africa, you can't do it without that sector. So these refineries are now the foundation of that. Before then, we just sell crude, we import. But now, what can we build on these refineries? Yes, we can build, whether it's plastics, we can build. There are so many things that people are now looking at in that leg corridor and say, oh, this is now possible. So for me, I think that was fundamental. So removing fuel subsidy was something we've had for 40 years, and a government single-handedly did it on day one. I think that is profound. Then to follow up 2 weeks after, even though it was too soon, to follow up 2 weeks after and realign interest rates as well. Then follow up a year after and pass a comprehensive legislation on tax reforms. It's very easy for us to now think, but why was it not done in 40 years or more than 40 years? So there are still so many reforms that will happen. There are still so many reforms we need to happen, especially when it comes to micro trade restrictions, some of these sector-specific reforms that need to happen. However, we are now in the right place, meaning that the key macroeconomic ones have been done, and now we have, hopefully, the time, the space, and the ability to begin to unlock critical investments in critical sectors with further reforms. So for me, I think that's been the most profound thing that has happened in the last 2 years, but obviously we need to build on them. They don't solve the problems, they only provide us an opportunity to do that. So I think that's profound.
Thanks. We have about 15 minutes left, and we can give that time back to you, your day, but we also would invite any of you, if you have questions or comments, contributions. Mike is coming.
Hello, everybody. My name is Timileyin. I run an e-mobility startup in Lagos, Nigeria. And I think there was a question you asked concerning, and I think these are some of the issues that we face specifically as startups. First is we have a lot of regulations that work, but accessing them or interacting with them, so to speak, is very difficult. For instance, because we're in the renewable space, whether that be solar or EV vehicles, like you said, we're tax exempt. Getting it is
Never so.
basically impossible for me. It's cheaper for me to just go and pay the tax implication. And so I think the question would be, are there ways that you can help us clarify how to get that? And are there ways for the government to make that a more transparent, and maybe transparent is not the word, but easily accessible? Is there
Less
something
bureaucratic.
online that I can just go apply with proof and then it becomes implemented? I think the second bit of it is there's the PCNG policy, and I know it's been expanded to include e-mobility, so that's EVs, but there's no clear direction, at least from our own side, from the private sector, on how do we tap into that process and what are the criteria for matching that. For instance, we have over 200 vehicles on the road that are EVs, and we'll get to 500 by year end and 5,000 by next year. The question is that we're doing significantly more than what you would expect even from the CNG side, and we're way cleaner than CNG, and so I would guess that's the goal. How do we tap into that framework from the government POV? Again, because it's not very, very clear to us on the private side, and so what we are then left to do is just go and do it the difficult way, like we're one of the petrol guys. And I think the last question, which would then be all encompassing, would be access to credit to be a critical aspect of what we're doing. And I know the Ministry of Finance has a lot of talk around the carbon credit framework and how we can access or interact with that. Even from a credit POV, leveraging future carbon credit is a cheap way for us to access credit, whether it be locally or internationally. The issue again is that we hear of the policy, we hear of the reforms, but from the private sector side, and maybe because we're really small, there's no way for us to interact. The amount of effort and money to come all the way to Abuja and know somebody is not worth the time, because for us as innovators, we just want to build, and we want to build very quickly. So I would say those are my three big concerns. You guys are all correct. There's a lot of policies that have been driven right from the last administration into this administration. There's a lot more clarity in terms of the macroeconomic POV, so either that be FX or interest rate stability. The problem is that now the next actionable fiscal policies, we just know that they exist. We cannot access them, and so it's basically useless to us. So I don't know if there's a way for us to interact with that.
Yeah, hello. My name is Ologun Fora. I actually support in building the impact investing ecosystem in Africa. My question is really short. On the sustainable development goals, we talk about a lot about investments, but most of the time, really, one of the critical issues that we have in sub-Saharan Africa really is that we have a young population, we have a lot of women, and most of our young population really, they don't really have good jobs. Everybody's trying to find a way to get out of the continent. So how do we address investment for the SDGs, especially the social component, such that we can keep our talent within Africa so that they can contribute to development? So I want to, especially from Ogo, you talked about the reforms, and one of the things that I felt that the government didn't take through at that time really is to have a clear plan in terms of how to alleviate the pains of these reforms. Thank you.
Okay.
Thank you. My name is Tope Olonini, co-founder Infinity Microfinance Bank in Lagos. I must really thank the panel for really bringing to light all the reforms that the governments have done and explaining it and giving us all the milestones one by one. It's very interesting, very encouraging. Now, you have also admitted very clearly that there are a lot of macroeconomic improvement that we have seen so far, but it has not really filtered down to, to the micro level that can affect, and increase the economic growth that we are looking at. I believe and I know that one of the fastest way to get that done is to really solve the power problem, because that will directly affect everybody. There is a Musa somewhere, there is a Ade somewhere that is doing barbing saloon but can only operate for probably 2 hours of 12 hours in a day, and the cost of fuel and all those things. There is a tailor somewhere that is only able to operate 3 hours. Whereas if there is light, it can actually do 15 hours. Nigerians are so hardworking. And I think Umar has also said a lot, both in the previous paper and this paper, of all the things. But my question, my concern is that within the next 2 years or more of this current administration, what can the government really do to really make sure this biggest problem that I believe is what will give us the greatest turnaround can really bring to a reasonable conclusion? Because I believe that if this is the only problem the current administration can solve, let's say by 80 or 90%, it will have gone down in history that we have achieved something that is very, very great. And it will affect all sectors, including the area where I operate, because everybody will be able to produce more, earn more, and we'll see more growth in the economy. Thank you.
Can I answer his and then on the carbon credits?
Let's just take one more comment
okay.
and then yes, we'll hand to you.
No, sure. No worries.
Afternoon, everyone. My name is Tim Sesby. I'm with investment house in Lagos, WSDC Financial Services. And my question is for you, Yousef. With respect to NSIA, how can we support you, more support NSIA in supporting Nigeria? And the way we look at organizations like yours is, if we're able to tap into organizations like yourself, we know that then you can go ahead and deploy, capital the right way to the right people. So we don't necessarily have to come in as supporting you with capital, but how can we as a financial services house actually support you in the long-term vision of growing the country and moving the GDP growth rate, faster? So yeah, that's my question.
All right, thank you. So on the carbon credits, yes, I think that's a very important asset class that Nigeria has to, that Africa has to unlock. Nigeria has done quite a bit of work in that regard. As you may know, there's been a change of leadership in the NCCC, which has been saddled to essentially drive the climate agenda of Nigeria. But I think we're almost there in a way where we activate that market and then you're able to trade both from a compliance and voluntary perspective, these carbon credits. They're very important even for the power sector as we sort of unlock additional revenue streams for projects to make them a bit more bankable. So that is in the works, I assure you. I had expected that by now we would have had an active carbon credits scheme within the country, but I think we're getting there. And then on your point on power, let's get more power and Nigeria would be better. I hear you, but I think something else, because it's also very important to understand the counter-argument, not counter-argument, but the counter-position of things. If you were to compare Nigeria with peer countries, other emerging countries, Brazil, Indonesia, what we consider from a GDP perspective as peers, Nigeria ranks the lowest in terms of consumption of energy. So we don't consume enough energy to drive these things that we think we want. I live in Wye in Abuja, so if Wye wouldn't be Mayfair in London, it will be maybe like South Ken. But I was in an association group, yes, and the topic of conversation there was, we don't want Band A that gets 20 plus hours. That's too much, we're paying too much. We're suing NERC and AEDC to get us back to Band B. So you see, the issue isn't about availability or anything, but honestly, we think we want these things, we can afford it, but sometimes we actually don't. But the point I'm making is that we're not consuming enough energy. When Nigeria was coming up with the energy transition plan for the country, it looked at 5 key sectors. There was buildings, oil and gas, agriculture, transportation, and one other one that I can't remember. But 65% of our consumption comes from residential and commercial buildings. What that means is not industry, commercial and residential buildings. What that means is that we're not putting that energy to productive use. So even if you have, I said earlier that we have 13 gigawatts of installed capacity. Even if you have 30 gigawatts, if our productivity doesn't increase, then that energy is useless to us, if that makes sense. So there's a balance. We have to be more productive. We have to use energy. We have to have use for that energy for it to make sense.
So can I add to that?
Yeah, go ahead.
I think that the actual cost of energy should be within the band A range. And that is where the power sector reform comes in. There's still going to be some form of reform within the power sector, which will correct the anomalies within the sector and make it a lot more attractive to investors to invest. As it stands today, I don't think it's attractive. The same issues that we've talked about, from transmission to generation to distribution, are still the same issues since 1982, right? So they still need, I think Yousef was just he packaged it in a very, good way, but I agree 100% with him. But in my own perspective, I think the solution to the power sector is a reform, whereby you let the tariffs be cost reflective. And that, for me, in a way, takes us to a band A range, where everybody pays at that level. And if you do, you know what the implications will be, right? But then, in the short term, there'll be pain and all of that, but in reality, it will translate into new investment and a complete transformation of the power sector. I understand to be,
So, if we look at it like that, then it's too static.
Yeah.
It's dynamic. So I think that's where he's coming from. Look, where we are now, electricity is expensive, right? Right. We think it is costly. Why is it costly? Because we're not producing enough, right? However, for you to attract the investment that will make it ultimately cheaper, you need to remove all the subsidies, right? We've removed some, but we haven't removed all. There's still some, I think 1.7 trillion still in subsidy. So we need to remove the subsidies. We need to reform, attract the investment, make it accessible. Then not accessible, of course, price goes up. But eventually, because we improve productivity, the price will come down. Because even this cost we're talking about, whether it's band A or wherever it is, it's not as expensive as it is here. Yeah. But what is the ratio of someone's income, right, spending on power here? It won't be as compared to, because even some rich people in Nigeria, they say, no, they backed out. I don't want band A. So the point is a continuous process. That is why if I have a message for everyone here, it would be like, look, the key foundations have been laid. That's the key foundations. We've removed two major distortions in the economy. If we continue on this path of stability in exchange rate, bringing inflation down, right, improving productivity over time, these investments will come because growth will come. So the demand and all these sectors will begin to sort out themselves. So whether he's the barber or whether he's the hairdresser, whether he's the tailor, everybody will have the opportunity to grow their business and, of course, grow their own income. But at the moment, we have to absorb these shocks. And to be honest, we have not absorbed enough. There will still be different levels of shocks. Yes, because you have to do reform. So let me quickly use the opportunity to also answer the second question. Fiscal policy, no doubt, in Nigeria is one of the most difficult areas to do fiscal policy. Because I think you are in government, so I think at least the two of us are in government. We can be twins for two minutes here. There are silos. That's number one. Execution is poor. But let's leave that. I come from the private sector, so even though I say I'm in government, I'm also private sector. There's something the private sector people don't do very well. Most private sector people, when they engage government on behalf of their company, not industry. They're looking for leverage and not group.
Collective.
Yes,
Yeah.
they're looking for leverage. Oh, I know, Yousef, our company, this is what we can quickly do. You know, but the way we should do it is engage government as a group. You're most likely to get results. Then number two, there's this notion that you have to come to Abuja, right? I understand that, but that's not also true. In the office of the Honorable Minister for Finance and Coordinating Minister of the Economy, we receive letters every day. But do you know what those letters are about? Invitation to come and speak. So, I mean, but just last week at the NES, right, somebody approached him and said, look, we've been trying to get this thing done, and it was not done. And they said, look, speak to my essay, that's me.
Right.
Within a week, we know what the issue is. We know what to now do with the issue, because the president presented an industry and a national case.
Right.
Do you get my point? So many people, for me, two things. Present your case. You know, framework. One, this is the law. This is what we're having. This is where the challenge is. Send it to the ministry. You will be so shocked. Someone will read it and get back to you. But businesses don't do that. They want to meet the honorable minister and talk about their own private business. So if we understand the system and at least be less focused on our own personal business and treat it as an industry problem, I think we'll make progress.
Sorry if I just a small rebuttal to that one. I totally agree with you. And I think my question is, so you said we should write to the ministry, and it would be good to know who exactly or where exactly we are to.
Okay.
Because what we need is apply here. So we're not asking for us, but for our industry point of view. All my colleagues say exactly, and they said exactly the same thing. Where do I apply to?
So it's not about you applying. I'm saying, look, there is a problem. Write to the Ministry of Finance. Simple.
No, no. So if I can ask you guys just to exchange information.
Okay.
And, but thank you all for your time. It's been a pleasure. Thank you to the panelists. Again, it's been a pleasure. And have a good evening.
And thanks to the moderator.
Thank you.
Yeah.
Thank you.